Well, holy smokers, folks, this ain't no dang jokers. I have something pretty exciting to share with you in regards to today's video, okay? Now, this is big for one particular stock we're talking about in this video, okay? But what I'm going to explain in this video is very important to remember forever in the stock market, because there's a certain thing that happens shortly after a company goes public that is a very important thing, actually, for companies. And I want to explain why this is such a big deal so you can identify this in future stocks you're in and you understand like why this is such a big deal that is going to transpire with this particular company over the next year or so. And when you're looking into future companies, you can understand, okay, this is a huge deal and here's why it's a huge deal. So I hope you guys enjoy this video. As always, hope you learn a little bit from it, regardless if you care about this particular stock we're going to speak about here today. And no, it's not Amazon. I just brought that up as a point to make in this video here today, but hope you learn a little bit. And by the way, make sure to subscribe to the channel. If you haven't hit that subscribe button yet, hit that subscribe button. It's absolutely free to do so. And if you want to be notified every time I drop a video on this channel, you can do that as well. This is Financial Education 3, and you never know when I'll drop a video on this channel. It could be in the middle of the night. It could be on a Sunday afternoon. You just never know. Also, Moomoo has a pretty sick deal going on. 5 free stocks right now, valued up to $3,500 each with any account setup, essentially. You could put like $1 in your account and still receive the 5 free stocks. So check out pinned comment down there. That's a pretty insane deal, and take advantage of that, guys. Alrighty, so let's get into this. All right, so if you look at Amazon, what I'm looking at here is on Yahoo Finance, I go to the analyst section, okay? And what this is going to show you is how many analysts basically have their estimates in for Amazon stock, right? And so right here, we see there's 44 analysts that cover Amazon that have their earnings estimates entered in, right? 45 analysts for next year have their numbers in. 45 analysts have their revenue estimates in for this year, and 45 analysts come in for basically next year's revenue numbers, okay? So this is a huge deal. Why is this such a big deal? Well, when you have that many analysts covering a stock, they're constantly in the news cycle. And when it comes to analysts, okay, these are people that are usually employed by big investment funds or usually by big investment banks or just banks in general, okay? You'll hear it from even like credit agencies and different companies like that, okay? And basically these analysts will come up with upgrades, downgrades of stocks, and they kind of keep it in the news cycle. And as you know, I don't have the most respect for the analyst community, right? However, when it comes to analysts, they are a necessary part of the stock market because funds listen to these folks and big money actually listens to these folks. And if an analyst comes out and says, buy Goldman Sachs stock, or if an analyst comes out and says, buy this stock over here, a lot of times you'll see that stock go up 5, 10, 15% the next day, especially if it's a smaller market cap, right? Maybe if it's Amazon stock, it's not as big, right? Because Amazon's like a $2 trillion market cap. So one analyst coming out and saying something positive isn't necessarily going to move its stock price 10%. But you see this happen if an analyst comes out and says, this stock's a strong buy, right? And especially if that analyst has weight and they work for a big investment bank, funds actually buy off this. And that's why you'll see a big move. And on this flip side, you can see a big downgrade. And next thing you know, stock's down big. And one of the things we always dealt with Tesla back in the day, right? When it comes to Tesla Tesla, analysts would come out and downgrade Tesla and say it's going to $0 and whatever. And that would negatively affect the stock price. And all of a sudden the stock would go down 3, 5%. And a lot of us that are shareholders are just frustrated, right? But at the end of the day, it was keeping it in the news cycle. And at the end of the day, money moves based upon what analysts have to say about a stock, okay? And so as much as analysts frustrate me, they are a necessary part of the stock market, and you have to understand that the more analysts that cover a stock, it's important for a company because it keeps them in the news cycle and it keeps big money looking into these stocks and thinking, okay, I should go ahead and buy the stock because the analyst I care about is going ahead and saying the stock's a buy now or sell now and things like that, okay? Now, if we look at a company like Beyond Meat, BYND, that went public a couple years ago, right? Beyond Meat now has 15 analysts covering this stock on the earnings estimate side, 15 for next year, and then 18 analysts covering the stock from the revenue side, right? 17 on the revenue side for next year. Sometimes you get some folks that are more comfortable, analysts that are more comfortable calling the revenue numbers rather than EPS, because EPS is hard to call. I'll be honest, like I've been doing this for a long time in the stock market, and it's hard to call EPS numbers because you have so many moving parts around expenses. You have so many moving parts around what's GAAP and what's non-GAAP, right? You have so many moving expenses around taxes and different taxes that are issued in different countries. If a company's international, it gets very, very complicated to try to call EPS. That's why more analysts like to call revenue numbers, all right? And so that's something you should expect with a Beyond Meat. I think a Beyond Meat's under $5 billion market cap right now. 15, 18 analysts. And these, like I said, these analysts are always coming out, upgrading the stock, downgrading the stock, saying buy the stock, sell the stock, things like that. Now, analysts, what they tend to do is many times they pile on. Okay. And so if a stock's doing great and a company's doing great, they pile on with the positivity and the buy and they buy. And then when the stock does bad and they miss numbers and the stock price goes down, the analysts tend to pile on to the stock and say sell. And this makes it actually where this is actually something that's good if you're a long-term investor, right? Because they can make a stock go up so high that it begins to get overvalued that it makes sense for you to take your profit, right? Or if they just pile on, say sell, and the stock just continues to tank, you get this incredible opportunity to buy a stock for way cheaper than you would have if the analysts weren't piling on, right? But at the end of the day, what we should have learned by now is analysts are vital to the stock market. Doesn't mean their opinion is like the one you should care about, but at the end of the day, they are vital to the stock market. They do move stock prices, and the more analysts you have covering a stock, the more that stock's in the news cycle, the more that stock is relevant to hedge funds, institutional money, and just big investors in general, all right? So, with that being said, when it comes to the chef, one of the many things I'm bullish on in regards to this company over the next, if we're just going to think about the next 1 to 2 years, if we're not even talking about the long-term story with the chef, the next 5, 10 years and the fundamentals and things like that. Over the next 1 to 2 years, something I'm really excited about is how many analysts are going to end up covering the stock. Right now, there's been two analysts total that cover the stock. A company that had a disappointing quarter last quarter, and they still grew, 43% plus, right? In my opinion, by this time next year, there will be 5 to 10 analysts covering TTCF stock, in my opinion, okay? 5 to 10. 5 worst case scenario, 10 probably best case scenario. What this does is all of a sudden, Tattooed Chef begins to become much more relevant in the overall investor community. I have a Tattooed Chef investor community on my channel because it's a stock I've been buying super heavily for the last few months because I believe it's going to go up exponentially over the next 5-10 years. But that's about it, okay? Big money doesn't have any clue about TTCF stock. Hedge funds don't have any clue. The only way Tattooed Chef's going to be found by the quote-unquote big money, right, is by analysts starting to cover this stock, starting to upgrade, downgrade the stock. And when it comes to TTCF, I don't even care. They could downgrade the stock and say it's a strong sell. I don't care. As long as they come in and they're speaking about the stock, that's all I care about, because I need big money to be aware of this story, because I know a lot of folks that have big money are going to look at this and be like, wow, plant-based food company, 43% revenue growth last quarter, expected to have insane revenue growth next year. EPS is supposed to trend much better in 22. It's a huge margin story over the next several years, getting into all these different categories, getting into all these different grocery stores, SKU expansion, long-term international expansion. And when they start to realize this, I think there's going to be a whole lot of big money that says, oh, this is a pretty interesting stock. This is one we want to buy and hold for the next several years, okay? And so, needless to say, 2 analysts just isn't going to cut it for getting that attention, okay? But as this video says, it starts, okay? It has begun. Just a couple days ago, this came out, right? Tattooed Chef rises as Cowen calls it a favorable risk-reward play. Analyst Brian Holland says the stock is a favorable risk-reward play. He's initiating coverage, which means Cowen's never had coverage on the stock, and now they're going to start covering it, okay? With an outperform rating. Outperform rating means he expects this stock to outperform, however, the S&P 500 does. If somebody says the stock's going to underperform, they're basically saying the stock's going to do worse than the market does. If they say it's going to be a market perform, that means they expect the stock to do roughly in line with whatever the S&P 500 goes up, right? So, or down for that matter. But an outperform means he believes this stock's going to do better than the stock market does, okay? So, This analyst says it's a favorable risk-reward play due to the emerging secular tailwinds surrounding plant-based and frozen foods. Holland is praising the company's single-brand focus and vertical integration. This company meets all the things that Wall Street's going to go crazy over the next couple of years. That's all I can say. Along with its acquisition of additional capital to scale the business. Cowen assigns a price target of $24 to TTCF, representing approximately 50% upside. The average sell, and that's usually a 1-year price target, just so you guys know, okay? Whenever they do that, it's a 1-year price target, okay? The average sell side price target is $20 for the stock, all right? So, this is a huge deal for TTCF. And if you're ever in stocks in the future, the more analysts that cover it, even if you don't have the most respect for analysts, it is important. You have to, there's thousands of stocks in the stock market fighting for big money's attention, for hedge funds, for big funds in general, okay? And at the end of the day, there's only so much time big funds and researchers and high net worth individuals have to spend time looking at these stocks. And so you have to get the attention, and analysts get that attention. And if they come out with a big upgrade, downgrade call, whatever, that gets major attention, okay? The only thing that really gets more attention than this in regards to getting big money's attention is if you have somebody that's super famous in the stock market, like come out and talk super positive about stock and say they're loading up. Like Warren Buffett comes out and he's buying a stock super heavy. Like everybody's going to hear about that, right? Big money, small money, it doesn't matter. Everybody's going to hear about that. If Cathie Wood's buying a brand new stock and she goes on CNBC or Bloomberg or whatever, right, and talks about it super positively and gives this whole big bullish thesis, everybody's going to hear about that, right? So the next level down from there is analysts covering a stock. And so this is a massive deal, guys. And I'm super happy that now Tattoo Chef is going to be basically starting to become more and more relevant. These analysts will start coming in. They'll start doing their market performs, underperform, outperform like this analyst had on, whatever. At the end of the day, I always invest in companies that I believe the big money's coming to over time. And Tattoo Chef is one of those companies I look at and I say, this is a perfect big money story and big money will flush into the stock. But big money's not going to flush into the stock if they don't hear about it and they don't know about it. Just like Tattoo Chef could keep putting up these incredible numbers, but if nobody hears about Tattoo Chef that's big money, how are the funds ever going to buy in, right? The funds aren't all just watching my YouTube channel all the time, right? They're flying around on yachts or whatever, right? So anyways, guys, much love as always. Hope you enjoyed this video, whether you're a TTCF shareholder or not. And remember, keep this in the back of your mind in the future, guys. Analysts are they are what they are, and they are a necessary part of the market. And don't forget about that sick Moomoo deal. That's basically in the description area. I also probably have as a pinned comment for 5 free stocks valued up to $3,500. Much love as always, guys, and have a great day. Don't forget to subscribe.